Hey, hello guys, welcome back to topic 5. So on this topic I'm gonna explain to you what is all leverage trading all about, and after that compare it with margin trading, why I feel that leverage trading is much more better and easier to understand. So before we get started, if you are not subscribed to the channel, kindly hit the subscribe button, turn on post notification and leave a thumbs up to this video, and let's get started. So on leverage trading itself, I'm going to talk about what is leverage trading. It's basically using a funds that you only have to like multiply it with by 100 times or even 125 times depending on the trading pair you are using. So we are going to talk about the interface. So we're going to talk about the interface, which is 5.1. So over here on Binance itself, just head over to the derivative, and after that over here you can see US Tether, USD, M futures, Coin M, and after that Battle. I'm going to talk about these three, and after that for the USDT, USD margin trading. Over here, I mean leverage trading. Over here you can see that the interface is quite simple and similar to the spot trading account. So on the Coin M futures, it is also the same, but the trading pair itself, you have to take note that over here there's some quarterly, and after that I would say that if you want to really trade, if you use the perpetual over here, this is trading without expiration. Therefore you can keep trading, and after that for the quarterly itself over here you can see the time to deliver is 130 days. So if you are going to trade for long term, and after that you do not want to like worry about expiration on this trading contract and stuff like this, do not use the quarterly option. Therefore just only use whatever is shown as perpetual. Just click on it, and after that for USD, basically it is using over here, this is talking about USD. I'm going to talk about it in the topic 5.3. So basically the interface of this over here, which is the battle. The battle is much more, I would say, like a game. And after that, you need to open up your account. And after that, over here, you can see that you can play some games. This is very short term. Just hit the leverage on 20, and after that, you can choose the count and something like that. And once you have clicked on long, you are basically versusing another person which is going on short. And after that, if the price of Bitcoin like either go towards your favorable direction, which is long, hits a certain price and you win the game, and basically you will get this ranking, and after that you can see the victories, and after that the winning streak and stuff like this. And over here we are going to talk about funding your. So over here, just head over back. Let's say you are going to fund your account with US Tether. I would say using the USDT. Just click on it, and after that, what you need to do is just head over down, click on transfer, and after that, the assets over here is going to show you. You can use a USD or Binance US dollar to fund your account. So just click on the leverage trading derivative, and after that just head over to USD-M futures, and after that just scroll down, you will see this transfer button. Click on it, and after that over here you have to choose the spot wallet depending on where your US dollar is at. Click on spot, and after that choose USD, and after that either you can use BNB, BUSD or USDT as your capital. Example 100, just enter 100 and click on confirm. Once you have confirmed it, it is going to show you your balance, which is 100. And after that, for the Coin M, which is coin margin futures trading, so you will need to fund the account with the cryptocurrency that you're going to trade with. So let's say if you are going to trade solely on whatever, let's say Bitcoin, if you want to trade on Bitcoin only, and after that you need to do is just click on transfer, and after that choose the coin that you are going to trade on. So Bitcoin, and after that spot wallet towards Coin M, just enter the amount 0.01 example, just click on confirm, and it is going to be funded. And of course we are going to talk about what is US Tether on the topic 5.3. So on the topic 5.3, what is US margin, US dollar margin, and the coin margin. Basically these two over here, you can see USD-M and Coin M. What does these two options do? Basically for the US margin, you are basically using the US dollar as your trading, as your capital, and after that you can trade with any pairs that is supported on the USD-M, and after that over here you can see there's quite a lot of pairs that you can trade off with, and after that whatever profit, whatever settlement it is going to be done, it is in the US dollar. So you can see the P&L over here, I have a position, this amount, entry price, and the mark, and the liquidation, and the margin ratio. And after that, yeah, basically how much margin it's been used and the mode that I've used selected for my trading. And after that, the P&L. So over here, the P&L is showing 573. So if I close the position right now, I will receive $573. And after that, yeah, basically over here, whatever trading pair you're going to deal with is using US dollars. So you can trade with any trading pair you want to, and after that make profits in US Tether or Binance USD, and after that BNB, whatever it is. So let's talk about the coin M, which is coin margin. So over here, this is a bit different. So for example, let's say you want to trade with Bitcoin, you will need to choose the Bitcoin perpetual. Just click on BTC USDT, and after that, yeah, basically you need to fund your account with the Bitcoin in order to trade with over here. So over here, you have to choose the BTC USD perpetual. Just click on it, and you will need to fund your account with Bitcoin in order to trade on the Bitcoin towards USD ticker. If not, let's say you are going to trade with Ethereum. So for the Ethereum and USD perpetual, you need to transfer Ethereum onto your trading account in order to open up position on the ETH USD perpetual, because whatever settlement it is going to be done, it is in the coin. As you can see from the name, coin margin. Basically, you are using the coin that is going to trade. So let's say you want to trade on DOT. You need to have DOT in order to open up position, and after that settled in DOT, and after that for Link as well. So if you are having Link, you will need to have Link to open up trades, and after that from there, your settlement and your profit and your loss is going to be in Link. And after that, this is a little bit complicated, but over here for the coin margin itself is for people who are solely focused on growing your assets in the form of currency that you want to grow. So example, for Bitcoin, you want to generate more Bitcoin. Yes, definitely you can use the coin M margin to basically generate more Bitcoin, more Satoshis. And after that, for Ethereum, you can generate more Ethereum using the coin M futures. And after that, if let's say you want to trade on the US Tether margin, just use the USD margin, and after that from there you are able to generate more US dollar, and for your own you can use it at your own discrete, whatever you want to do it. You want to cash out, you want to buy more other coins that is not on the margin, not on the futures, and after that let's say you want to buy a new coin, or even though like whatever you want to do with it is totally up to you. So right now we are going to talk about the topic 5.4, margin mode and leverage, and after that leverage type and the risk involved. So over here on the topic 5.4, which I'm going to talk about the margin mode, and after that the leverage type and the risk involved. So over here you can see this is the classic example over here. So you can see the leverage mode, it is at 100 times, and after that you can see the size. Basically, this is the position, this is the amount of contract that I'm holding, and the entry price, which is how much I have entered in the position, and after that this is the mark price, which is showing you the on the chart itself. You can see the mark price follows whatever is shown on the chart, and after that the liquidation price, which I would say this is the risk. Over here, if you're going to use 100 times leverage, I'm going to add a little bit of margin for you to see. So over here you can see that over here, if you are going to open up a position, you will need to head over here, isolate. I will say if you okay, so we are going to compare on cross and isolate. Basically very simple to understand. Cross is using your whole wallet as collateral, and originally if you use the cross mode itself, it is going to be 100 times leverage. And after that, if you're going to keep adding position, let's say you have $100 worth of US Tether, you can open up to $10,000 worth of position, and of course using your amount of $100, you can use the collateral, and after that as the collateral. So basically, let's say you're gonna stack your position on the way down of Ethereum. So example, you're gonna set an entry at 1,800 and 1,750, 1,750, and so on and so forth. And basically, if you're gonna keep stacking down, you are able to do that, but your liquidation price is gonna be nearer and nearer, because let's say you have $100 and every entry is going to use up $5. Eventually, if your whole wallet on the available balance is at, let's say, $50, basically you are using up 50% of your um wallet, and after that that caused the liquidation to be nearer. So I would say liquidation is a very risky thing. So what I recommend people to do is head over to the isolate mode and click on confirm, and after that you can choose the leverage type. And after that, for beginners, I would say using 1 to 3 time leverage is good enough. And after that, if let's say you are much more advanced, I would say 5 to 10. And of course, if you are crazy and you're gambling, you can go up to 100 times leverage, which is not recommended, and of course not financial advice given. I would say that the higher the leverage, the nearer the liquidation price is to the entry price. Therefore, yeah, use it at your own risk. And after that, you can see I already added and repaid some of my margin. So for isolate itself, if let's say you open up a position, and after that, example, I'm just gonna do an example for you guys for this video. So I'm gonna go to Bitcoin, and after that over here you can see that I have no position on Bitcoin. So we are gonna head over to the topic 5.5 as well. So over here on the topic 5.5 is telling you how do you place an order. So over here you can see there's a limit order, and after that yeah, let me head over to the USM. So over here we are now at the US tether. So as you can see, I have $50 on my balance, and after that I'm gonna choose isolate, and after that I'm gonna do 3 times to be safe. So over here you can see that okay, example, the price of Bitcoin is at this level and I want to get it at a cheaper entry, example like this. And after that, how much Bitcoin I want to pay, I can use a slider. So here I'm going to use the preference, and after that I will advise you to head over to the preference, and after that the order confirmation, make sure that order has a confirmation, and after that you click on confirm. This is to prevent trades being positioned like to confirm your orders before you make any trades. So over here we are going to do a market order. So let's say for this tutorial itself, I'm going to teach you how to place an order. So over here we are going to do the market order. So the minimum is to do this amount, and after that click on, and once you enter the amount of Bitcoin, it's going to tell you how much it's going to cost. So I'm going to use a larger margin, a larger leverage. So over here you can see 0.001 is going to cost me only $4. So I'm just going to click on buy and done. And after that you can see over here I have a position that is being entered, and after that at this price level, which is 48108, and after that the mark price is like this, and after that you can see the liquidation is at 43. So once if Bitcoin reaches 43.468, this position, once this amount is being reached, my whole position is going to be gone. So basically over here $4.81 is going to be gone instead of my whole balance. If I use the cross option, my balance, maybe my margin is at maybe $10, and after that I have $90 to risk. Therefore, if the price, maybe the liquidation price is going to be like at 29,000 or something like that, so we can check the liquidation price over here on the calculator, one way mode, and after that we can do it 10 times. Example, you have a balance of $90, just click on calculate, and after that basically there's no liquidation price because it is too far. So example, we're gonna do $10. So let's say you only have $10 left on your balance. The liquidation is going to at 38,000, and after that, if the price reaches that amount, you're going to lose your whole margin, which is $90, and after that, a balance of $10, $100 is going to be wiped off your account. And I would say this is not. If you have a huge capital, yes, using cross, and after that managing your risk, you are able to make lots of money as well. So we are going to talk about the limit order. So I have already entered a position on the market order, and after that you can see the price has rose, and I have made some like profit of 5 cents. So over here I can click on this, and I want to close my order at 4818, and I'm gonna put all my position that I can close, and I'm gonna use this option over here, reduce only. So if you're gonna close a position, I would recommend you to use the option reduce only, and after that post only. So example, you can see the price of Bitcoin is at $48,200, and after that, if I'm gonna click on sell now, a moment. So I'm gonna click on sell now. Basically, my order will not go through. Yep, but my order went through because yeah, basically if you enter below the amount of your example, the amount here is 4818, and after that the price is at 48200. Basically if you click on it, you can see the order history. It is gonna sell off at the average, and after that, yeah, basically gonna do a market order to execute the trade itself. So I will recommend you to use post only, and after that you can input the amount you want to enter. So over here, yep, so over here you can see that if you enter a higher amount, and after that the price, and you use post only, but on to be honest, on Binance itself, you can see post only order will be added to the order book and not execute with a pre-existing order immediately. So yeah, basically if you're gonna stack position, using the post only will be recommended. And after that, yeah, over here you can see I made a little bit of profit on this entry, so I'm gonna close it. Yeah, we are gonna talk about the conditional trading, and after that I'm gonna use this position to use it for example. So over here we are gonna talk about the conditional trading, which is over here the stop limit, and after that there's a stop market and a trailing stop. So I'm gonna use the trailing stop option. So to understand it, the stop limit order execute when a specific price is reached, and after that specifically a targeted price to activate the order, and after that for the stock market, execute when specific price is reached, and after that blah blah blah. For the trailing stop, it is over here, it is trailing stop order allows traders to send a preset order to the market when market swings take place. So basically, if you're gonna use the trailing stop, I would say you can use it to buy or sell to go for a long or short position, because the trailing stop itself, I'm gonna show it to you. So over here you can see you can set percentage. So for you to sell activation price, you can leave it at 0. Just ignore it because you are gonna use it on the entries price if you're gonna place a position. So you can set it on to 1%. So if you set this order over here, so let's say the price of Bitcoin is at this price level. So example, this order over here, if you click on sell, the price of Bitcoin, the activation price is this price, and after that, once it falls below 1% of this price, it is gonna execute this trade. So I hope you understand what I'm saying. So the callback rate itself is telling you if it's for you to set the percentage of your trades being executed. So this is for the activation price itself. This is the amount that the entry level, I would say, that you are willing to go lower. So for this trade itself, for the trading stop, is for you to take advantage of like a dip, and after that for you to catch the dip on the market. So for recommendation, normally people use 3 to 5% to catch a really huge correction, and after that for them to make a little bit of profits in the trade. So they are gonna use the activation price, which set, let's say they're gonna set the activation price at this, and after that the price should be relatively near to the activation price, and after that from there they're gonna choose the percentage to go short or go long depending on the trading style. And after that, once you have completed this setup, just click on sell, and it is going to show on the order itself. And after that, I'm not going to execute the order. So for stop limit itself, it's the same. So the price and after that stop price per se over here. Execute when a specific stop price is reached, and after that a trigger price activate the order. So stop price maybe at something like that, and after that you're gonna put, and after that the size. So this is the activation price, and after that this is the trigger price. So on the price itself, it is to set as a trigger price, and to execute the trade, it will reach this amount, and it's gonna sell or buy depending on your trading style. And after that, for the stock market, relatively easy. Just enter the amount and the amount of Bitcoin. Once it reaches the price, it is going to sell or buy. It's going to go long or short depending on the stock price you enter. And after that, I would say using the limit order, it is already good enough for you to trade normally. And after that, over here, you can take take profit and stop loss to do your risk management. And after that, over here, I would say that once you have, and let's say if you are going to do a trade that is your entry price is at 47,000, for example, the price is 1k difference, I would say that you will need to have this take profit and stop loss being activated, because it is much more safer that way. But if you are a person that go YOLO and you do not want to have a stop loss, instead you want to take profit only, of course it's up to you on your risk management. So for example, I'm going to go at entry at 7,500, and after that the amount is this amount, and after that I'm going to take profit at 6,100, and after that the stop loss, let's say I'm willing to lose like over here, because on this tab itself they are not showing you like how much you are making and how much you are losing. So over here I will say, once you have entered into your position using the option over here, take profit stop loss for the entire position, just click on this, and I'm going to take profit at example like that, and after that the stop loss is at, of course the stop loss is triggered below the market, below your entry price. And of course, if let's say your entry price is at 46,000 and right now the price of Bitcoin is at 48,000, you are able to take profit, you are able to stop loss at a profit zone, which is relatively, I would say, I'm gonna set it up and show you. So it is something like that. If let's say the price of your entry and the mark price is very huge difference, therefore you can use the stop loss option to take profit. And after that, basically, let's say your profit zone is at 30%, you can set if the price has really went up over 50% of your position, you can set a 20% to take profit. And of course, if you are willing to go keep the position, and after that to generate more income, to take the you can do not enter the take profit option if you are already in the green zone. It is up to you, your trading style. So for example, I'm going to show you my Ethereum's position. So over here on my Ethereum position, as you can see, my entry price is at 1090, and right now the price of Ethereum is at 1830. And after that, you can see I can take a stop loss at $1,300, and after that it will probably never hit, or not really never, but it is nearly impossible to hit this level again. So I can adjust it again. I can put it at something like that. So if I'm going to click on confirm, basically if the price of Ethereum went back down to $1,500, I am going to make a profit of 328 instead of 591. So yeah, basically for the take profit zone over here, you can see if the price of Ethereum hits $3,600, I'm gonna earn like around $2,000, $2,008. If it reaches 3.6 thousand. So this is how you use the take profit and stop loss. And of course, on the tab itself over here, if you enter the price over here, I would say it is, yeah, you basically can see how much you are losing and how much you are winning. And after that, over here, once you have entered the position using the TP and SL, you are able to really see how much you are losing and how much you are winning at the end. So example, I'm gonna do it like this. So if the price of Bitcoin went up to 49,000 and my entry price is at 48,174, I'm gonna make around 80 cents in profit. And after that, if let's say the stop loss, I do not want to lose so much money, I can do something like this. So I can do something like this. If the price reaches this, I'm gonna lose 7 cents instead of more. So I can click on confirm, and after that, it's gonna show over here the stop loss, and after that, the take profit for the entire position. And after that, you have to take note of the ADL. So basically, what's the ADL? If it is showing like all being light up, your position might be closed partially. So for mine is I'm already making like insane gains, so around 4,000%. And after that, over here you can see like it is already light up, and after that Binance will try to reduce my position if I do not have enough margin to pay. So I'm gonna do it something like that. So over here, if this keep going down to negative and negative, eventually if the funding can't cover up my margin, eventually they will close portion of my position to cover up whatever I'm owing them. And after that, I would say that yeah, you have to take note of the funding as well. So over here, you can see for leverage trading, there's a funding fee. So over here for Bitcoin, it's at 0.06. So basically, whatever amount that this size is, multiplied by 0.06, this is the amount that you are going to pay at the end of 8 hours. So the funding rate is always comes in at 8 hours, and after that, if the funding is showing at negative, basically if you are on a short position, you are going to pay the fees to the long position. And after that, if it's a positive number like this, basically I'm on a long position. After 8 hours of holding my position, I will need to pay a fee to the shorts people. And after that, basically, if right now if you are opening a short position, you are not required to pay a funding fee. Instead, you are being paid for opening a short. To hope you understand that. And after that, if you are on a long position, you are paying the shorts. So yeah, this is how leverage trading works. And after that, on margin itself, I would say margin trading is much more complicated. And after that, on leverage, it is much more straightforward. And after that, the risk is much more higher than, I would say, margin trading, because you can go up to 100 times leverage, 125 times on Bitcoin. And after that, it's crazy. I would say do it at your own risk. So that's the end of the video, and I hope you like this tutorial, the whole tutorial. If you like the whole tutorial, kindly hit the subscribe button, turn on post notification, and leave a thumbs up to this video. And of course, share this tutorial with your friends and family. And of course, kindly scroll down to the description, and after that, fill in the survey. And after that, I hope you can help me improve in my future contents. And of course, see you on the next video. Peace.